right, welcome back to Tax Sale Insiders, everyone. I am Rachel Seidensticker, and I'm here once again with the CEO of Tax Sale Resources, Brian Seidensticker.
Hi, everybody.
Hey, coming back.
Oh, well, thanks for having me. I guess I'm usually welcome, correct?
Yeah, usually. Usually I don't. People keep coming back and listening and watching. So I think the information we're putting out there must be used by somebody. So that's good.
I'll take that as a compliment.
That's right.
I'll keep blabbering then.
Sounds good. The rabbit hole, as we like to call it.
Yeah.
The rabbit hole. Yeah. Anyway, for those of you, this is your first time joining us. We try to meet and discuss different topics that we feel are probably applicable to you as the investor. We have interviewed experts in the industry, from attorneys to other servicers. And as of late, it's just been Brian and I sitting down, chatting it up about some subjects. And we're going to do that same thing again today. So, Brian, I think we'll just dig right in if you're cool with that.
Sounds excellent. Let's do it.
Awesome. So we're going to go a bit kind of, I'm not going to say it's away, but it's an interesting subject, and I think a pretty big one. It's applicable to what's going on in some big decision-making through Supreme Court and so forth. But the tax sale overages, big statement, big topic. I guess, we'll start at the very basics, because I think for anyone, it's an important thing to just understand the basics first. But what are tax sale overages?
Tax sale overages. Lots of different names I've heard. Excess funds. Bids. Or some of the other terms. Yeah, overbids. But basically what it is, and this applies normally to tax deed auctions where it's a bid up, style. There are some lien auctions where it's a bid up premium, although say chasing the excess funds in those just isn't as fruitful. I don't know of many people really doing that. That doesn't mean it couldn't be. But the excess funds or overbid or overages is really the process of, you go to the auction, right? If you go to the auction and they'll say the opening bid was $10,000, just for sake of example, right? That $10,000 is what the delinquent taxes plus fees, interest, all that kind of stuff. It's basically what the county is due if the taxes that had been paid, from the very beginning and this property never went delinquent. But if the property is worth anything, typically that will sell for more than $10,000. And so let's say, for example, the opening bid is $10,000 and it sells for $50,000, right? That $40,000 above what the county was due and what was sold is what is called the overage amount, or the premium bid amount, or the excess funds, right? And it's what do you do with those excess funds, or what can you do with those excess funds is what we're going to talk about today.
Yeah, and I think that leads, and great transition to the next question I have is, where did those go? Like, who claims that overage? Who claims that amount? And where does it sit, or what happens to them?
Well, I guess technically that's governed by each state, right? So each state could be different, and I'll kind of describe what typically happens. But ultimately, if you're wanting to pursue these excess funds in any shape or form, you really got to get familiar with the statutes that govern it. And usually it's toward the end of the tax sale, it'll address exactly what happens, right? So if you want to go look up the statutes that govern the tax sale itself, if it is a premium bid or a bid up of a state that utilizes that type of auction, then it should have statutes somewhere in there that state what happens to this. But in general, what that means is it's I'll say held by the county for a period of time, and that period of time can be anywhere from 30 days to multiple years, and maybe indefinitely. I don't know of any states where it's indefinitely, but it could be. I'm not an expert in every state. I'm not an attorney. I should probably lead every podcast off with that, by the way. So the county holds on to these. Now, there are, in most states, rights to the previous owner and anybody that had interest in that property, right? So previous mortgage holders, right, before it was sold, that have right to that excess funds. But the county's not going to notify all these people and say, hey, come get your money, right? It's really up to the previous owner and the previous mortgage holder to figure that out, and then figure out the process of recovering those excess funds or that overage amount. And that's the recovery or recovering mechanism. So the county holds on to it. They give it a period of time, and for the previous owner or interested parties to come collect that overage amount. And if that doesn't happen within that given time frame, then typically that goes somewhere, whether that goes to the general county fund, whether that goes to the state to hold for a period of time, maybe it goes to the state general fund. There's usually rules on where that goes, but you kind of have this time period following the sale to act on it, or the previous owner does. And if they don't, then that money goes, in a general fund to be used for other purposes.
Okay. And I guess, is there a way that investors make money off tax sale overages? I feel like, is there something that can be done in those where an investor can come in or does the investor make anything after they've bid this? How does that work?
Well, I guess what is legal, what's not. Again, I'm not an attorney. I definitely don't want to state, this is what you should do, and this is what people are doing, and this is the model to pursue. I am aware of investors that are, I'll say, helping previous owners recover those overage amounts, right, in some way, shape, or form. And if they can help that previous owner recover those funds, then typically the investor, as part of that fee, takes a percentage of whatever that amount is, right, or takes a flat fee or however, again, you really need to consult an attorney before you pursue this to make sure what you're doing is A, legal, 2, that, the documents are in place, and 3, and make sure you're not creating any enemies within the county itself, because you could do that real quick, and then even if the funds are there, you're going to have a million hurdles between you and actually getting it paid at the end of the day. But I am certainly aware of investors that are looking for excess funds and trying to contact previous owners or interested parties and work with them in recovering those excess funds.
Okay. But how about the investor that bid that overbid at the sale? Do they make money off of that overbid amount? Is there an interest rate that's applied to that, or where does that stand with the actual bidding investor, I should say?
Well, I guess there's a few things to unpack on that one. In general, right, does the investor make anything on that overbid? No, right? And maybe there's ways of working with the previous owner after the fact, right? I don't know. I don't even know if that's legal, quite frankly. I'm probably again, talk to your attorney. But it's not like, the investor, right, if it redeems, right, and I'll use Texas as an example, or Georgia, because they're similar, right? There was the amount that was due to the county, which was the opening bid amount, and then there's the total bid, right? So back to that same example, the opening bid amount was $10,000, and I bid $50,000, right? I'm earning interest on that whole amount, right? Okay. Not just the $10,000. I'm actually earning bid interest on that overbid. So I guess in that way, I'm earning from that overbid, but I don't get that overbid. At the end of the day, if it doesn't redeem, it's not like I get that overbid, right, in Texas and Georgia. Now, I will say, that is a nuance, especially in the lien side, that you need to keep track, because there are some states where you do get interest in that overbid, and I'll use Indiana, right? Lien auctions in Indiana, where there's an opening bid, there's a premium that you bid above and beyond that, and you do get interest on that premium bid. That does not equate to Colorado. It looks similar, right? There's an opening bid, you bid a premium, but you don't get interest on that amount in Colorado. And you actually don't even get that amount back if it redeems in Colorado. It's a very different situation. That's basically a cost of doing business is kind of how Colorado looks at it. So you really need to know how the auction is run. Just because it's a bid up or premium, you can't assume that you as the bidder, you bid that premium that you're going to get it back if it redeems. But that's separate, right? That doesn't really apply to excess funds. As it goes to excess funds or overage amounts, then I don't know of a state where the investor has any right to those excess funds if it doesn't redeem at the end of the day.
I gotcha. And I would assume, as that investor who's bidding at the sale, they have to come in with that overage amount. There's no you will owe this, you will always have to come in with that amount that you bid at the time of sale. Is that correct?
Not always, right? And quite frankly, there's, I'd say in most cases, that's a safe assumption, but Maryland's process is a little unique where it's a more complicated than this, but I use the example of whatever you bid that up to, technically at the sale, you only have to come in with roughly 20% of that. Again, not exactly 20%. There's rules you got to follow based on, I think, county land use and how much the bid was compared to assessed value. It's a complicated, but you don't have to come with the full amount at the auction. The rest of it isn't actually due until the end of the redemption period, right? So if in that example, I bid 10,000, or starting bid was 10,000, I bid 50, technically I don't have to come in with that 50, but if it never redeems, at the end of the redemption period, I will have to come in with the remaining amount of those funds in order to get the deed at the end of the day. So that's definitely a nuance that investors need to pay attention to.
Okay. All right. Well, rolling it back, I kind of dipped us off a little bit, but roll us back just as far as tax sale overages as an investment mechanism. How, if you had to kind of put everything in buckets, explain the differences in investing in these tax sale overages versus lien investing versus deed investing. And, how would an investor choose why would they pursue tax sale overages as an investment model?
Well, I guess the short answer is because it doesn't take any cash, right? It can be just your time to, I'll say, go after these overages, right? You don't have to have money to go find these, rather than money to do your research, right? And do your, typically the process is you find out, which overages there are, try to do skip tracing to find those, to find those previous interested parties or the previous owner, make contact with them, and then try to strike a deal with them saying, hey, I'm going to help you recover this money. Give me a percentage of it. That's kind of the general process. It doesn't cost you any capital to do that. You don't need like $100,000, right, to go do that. And so from that perspective, it's a little easier from a barrier to entry. Now, that part of it is easier, but it's finding the excess funds. Then you do have to skip trace, right? Find that previous owner. I mean, again, these typically tax sale properties and previous owners, there's a reason why the taxes aren't paid. Either they don't want to be communicated with. Maybe they don't even know that the taxes are due, right? There's a lot of reasons, but it's not as easy as just looking that person. In most cases, not as easy as looking up that person in the county records and they have a phone number. You call a phone number and talk to Bob, and Bob loves the idea, and it's not that easy at the end of the day. But I think when you compare it to lien investing and tax deed investing, right? Lien investing takes a little less capital, a little easier, a little safer theoretically, right? You got deed investing, which takes more capital, typically a little harder, not so easy. You got to, worried about the asset. And then you've got, excess funds or overage investing, which doesn't take any capital. It's kind of easy, at least to start down that path. But you got to do it a lot in order to be successful. And my personal opinion is trying to scale something like that is very difficult.
Gotcha. Okay. I think you touched on this, but let's just make sure we hone in on the states where there are tax sale overages. I feel like you mentioned a few, but do you want to kind of encapsulate the ones that you know of that are out there?
Well, yeah, I guess I think of it as any state where there's an overbid or premium bid method, there's going to be overages that can be pursued, right? Again, depending on the state statute. There are states where there was no option for the previous owner. There is no ability to, get that excess funds. There's actually a Supreme Court case going on right now that is fighting the ability for, right now I think it's Minnesota, that doesn't allow for those, the previous owner to have any right to those excess funds, right? And the previous owner is fighting that. And so that's gone all the way to the U.S. Supreme Court to decide that. And we're supposed to learn that here in the next couple of weeks, what the Supreme Court decides in that. So not every state is it, but I'd say in most states, if there's a bid up or premium bid method, then you will find excess funds. That doesn't mean it's easy to find what those excess funds are and how to trace them, but the opportunity will be there, right? So what does that mean? Well, Florida deed auctions, it will be there. Texas auctions, property auctions, right? Georgia auctions, Oklahoma, California, deed auctions in Ohio, Pennsylvania, Michigan. Those are just some of them, but there's a ton of states that utilize a premium bid method.
Okay, great. And just for a knowledge base for anyone who's listening, Tyler versus Hennepin County is the Supreme Court case being heard. And there's certainly a lot of information out there. We're tracking it. We've got it in our newsletter as well as far as what information, what updates are coming down the pike. And on the, I guess we'll say the tax lien investor side and what that looks like and how that affects them is being covered by the NTLA and Nelson Mullins Law Office. But there's a lot of, there's a lot of dissent and the fours. So it's a very interesting issue in the country right now, for sure.
We did interview Matt Abey. So if you are interested, take a peek at the other podcasts and look up the one that's Tyler versus Hennepin. If you really want to understand what that's all about, go listen to that. It's a great interview. Matt did a great job explaining exactly what the situation is.
Yeah, thanks. Would you say that there's any kind of quote best states where tax sale overages, if you were using this as an investment mechanism, an investor should get started? It's not something that we do. I would say we're aware of this process. I'm certainly not an expert, so I can't tell you where the best states are. All I can tell you is the states that I know where there's typically a lot of premium bid are going to be the more common states that people buy houses in. Right, Florida probably is going to have higher premiums. Maybe Atlanta area and Georgia. Areas in Texas. Right. I have no data. We have no data to say you're more successful in one state versus the next. So I really can't answer that specifically. But if you look up a state that you're in and you see that's a premium bid method and you want to start seeing if that's an option, then maybe it's worth a look. Yeah. Totally understand that. We don't give investment advice, do we?
Not only do I not want to, I can't in that situation. Yeah.
That's fair. That's very fair. Let's see. I guess pros and cons. I think you've touched on a little bit, but can you kind of categorize the pros and cons of this overage investing?
Yeah, I think the main big pro, right, is the fact that it doesn't take much capital to get started.
Yeah.
So if you want a model that's somewhat related, it doesn't just apply to just tax deeds, right? Any auction or foreclosure where there's excess funds, it applies to, right? So I'd say that's the one pro. Now the cons on it are you can do a lot of work. At the end of the day, I'll just use a scenario. You can do a lot of work to find the properties that have enough excess funds that are worth going after, the skip tracing to find that previous owner. You even get to the point where you get that previous owner or interested party on the phone, right? At any point, there's nothing that ties them having to work with you until you have some sort of document signed that, I'd say getting paid at the end of the day, right? If this is a model you want to pursue, this, just for the sake of helping previous owners, I think it's awesome, right? Just to say, hey, that's the one thing I think severely lacks is the fact that this is even an opportunity for previous owners, to collect on that. Now, if you're wanting to get paid on that whole, situation, there's nothing until you get a document signed that why the previous owner can't just go do it themselves, right? Theoretically, that's the idea. The county wants them to go do it themselves. And so now you're trying to navigate this, hey, previous owner, I got $40,000 that you have access to, but I want you to sign this agreement before I really tell you, details about it. I guess you'll find people out there that are willing to work through, and if you explain it in the right way, you probably have more success than others. I know if somebody came to me with that, I'd be like, click, right? It'd be it just doesn't, it's like a too good to be true, weird scenario. Why are you calling me? Is this fraud? Yeah. So there's a lot of cons as far as making it successful and then making that successful at any scale.
Yeah, that's, I compare it a little bit to, those things where it's like, you've got money sitting out there in refunds from your IRS taxes, right? Like,
Oh yeah.
is that really a thing? And you hear some people really have success in some of that, where your taxes weren't filed correctly, but not always. So yeah, I understand what you're saying. I think then, if just quick facts as far as finding tax sale overage lists and specifically, is there an easy way to do that? Is there a quick one-stop shop? Or, where do we find those things?
Yeah, I guess we have sale results lists, right? Which will do, show you which property sold, how much they sold for. You can quickly do the math to figure out what the overage amount is. It's out there. Really, the intended use is for investors to kind of do analysis to figure out, where are deals still to be had for, attending auctions directly. But, for those that are interested in pursuing this, the data is there. You can go and, log into TSR research and check the sale results, tab, download a list. And if you want to give it a go, the data is certainly there. There are some states and counties, out there that I've heard that are a little easier to work with. As far as they make that easily accessible online, but I think in general most states and counties nationwide don't make that data real easily accessible. But you can get the results we're able to get. You can go download online today.
Yeah, I want to make sure I kind of capture what you just said, because I think it's an important thing. It's going out and figuring it out is probably easier than working directly with a county that seems to keep that information pretty close to them, and a little harder to get the quote overage list itself, and what those amounts are. So I think that's the point that I'm hearing you make is it's, you can go out and get it in the results files and it's pretty easy peasy, but actually trying to get a quoted tax sale overage list or that excess funds list isn't always something that the county's willing to, release readily. So just
right. And I'd say those are far and few between. And I guess it's I'll say the same as when I talk to people and they always ask, like, where do I get the best deals? And the obvious answer is, well, where there's less competition, you get a better deal, which is, if it's an online auction, everyone and their mom is going to that auction, right? That wants to attend that sale. A live auction makes it a whole lot harder, less competition. You're probably going to find a better deal. I could show that to you in data all day long. And I have no data to back this up, but I imagine it's very similar, right? The counties that have this list of overages out there for the world to see, and the few people that know about it are on top of it every day, right? The competition on those is crazy, versus where it's harder to get, you're probably going to have less people pursuing that.
Yeah, great. Any quick tips on just how to get started?
Well, as I mentioned, if it is something that you want to pursue, we can't really. Well, not only do we not have the expertise, we're not an educator. We can't really teach you how to do it, right? I think there's educators out there. You can Google it, YouTube it, and, to learn exactly the process you need to go through. But as far as getting the data to start it, which is finding out which property sold, what those excess funds are, being a TSR member, going to sale results and downloading those lists gives you a great starting point.
Great. And I always like to end with, and we try to stress this all the time, not just because we're not attorneys, but also where you want to go, talk to the county, read your state statutes. You're going to have to do some digging. As with everything in this tax sale investing space, it takes research, it takes diligence, it takes, making sure that you understand and finding the right people, and then consulting an attorney, most likely, to ensure that you're on the up and up. So awesome.
Definitely.
Any parting words, Brian?
No, I think you nailed it, right? Is definitely speak to an attorney. The few folks I know doing it, I'll say the right way at any sort of scale are actually attorneys, right? And I think you need to be in order to learn the right way of communicating with the county, communicating with the previous owners, and not going over any boundary you shouldn't go over. So definitely do your research. I'd say this is not a model that you're going to scale, any size, but if it's something you want to do as casually, right, to see if you can get those few diamonds in the rough, might be worth it. Who knows?
All right. Well, thank you. This little known, I'm going to deem it a little known world. But I think becoming a bit bigger in the limelight with what is going on from a judiciary standpoint across the country. And we'll see where it goes. I would say stay in the know and go out there and do some research on this Tyler versus Hennepin County. There's a lot of other court cases that are kind of lingering out there as well about, tax sale overages, excess funds, and so forth. So stay in the know. And Brian, thank you so much for the information you were able to give investors, and we'll encourage you to go out there and ensure that you're doing your research. That's the key. That's the key.
That is the key.
Yeah.
That's the key. Good luck, everybody.
Good luck. Happy investing.